a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra. Today we are talking about top performing ETFs of the second quarter and whether they can continue their outperformance in the third quarter as well. So we know that second quarter was great for stocks. All major indexes, they rebounded strongly from their March lows. And that was thanks mainly to this unprecedented stimulus from the Federal Reserve and the Congress, and also some encouraging developments on the front of vaccines and therapies for the coronavirus. The S&P 500 was up 20%, the Dow Jones gained 18%, while the tech-heavy Nasdaq surged 31% during the quarter. Now, tech continues to be a crowded trade, and in fact, cyclicals rebounded earlier in the quarter, but rising coronavirus cases, particularly in the southern and western states, and reclosing of some parts of the economy, those developments unnerved investors, so they continued to pile into areas that benefit from the current crisis. Areas like e-commerce, cloud computing in particular. And investors believe that since consumer and businesses may change, some of their preferences may change permanently because of this crisis. So that is why they continue to pour money into these areas. And we know that second quarter earnings season kicked off today, starting with some big banks. So the direction of the rally would really depend on the earnings and also the path of the virus. But it is quite possible that these areas which did well in the second quarter may continue to do well in the third quarter as well. So let's take a look at 3 ETFs that did really well. So the first one I wanted to highlight is the Amplifier online retail ETF. So everyone was stuck at home and they were shopping online, and this is something which may, continue to happen even after the virus subsides. So this ETF invests in companies that derive 70% or more of their revenues from online or virtual sales. It follows a modified equal weighting scheme, so it holds US stocks as well as international stocks, and within those two buckets, stocks get almost equal weights, which means that heavyweights like Amazon do not occupy a large part of the portfolio. Smaller, faster rising companies also get a lot of representation. It charges 65 basis points and has 662 million assets as of now. Now, to take a look and learn about some more details about this ETF, we can go to the quote page on Zacks.com, read our research articles, and we can go to the external homepage, Amplifier's webpage for this ETF, and look at some other details. So as I mentioned, about 75% weight is given to US companies and rest is international, and those two buckets are equal weighted. And if you want to look at the holdings over stock, Peloton, Stitch Fix, Revolve, eBay, Carvana, Grubhub, PayPal, Amazon also is one of the top holdings, but because of this equal weighting scheme, it doesn't get a lot of weight in the portfolio. Now, the second one, which is also one of the top performers, is by WisdomTree. It is called the WisdomTree Cloud Computing ETF. And unlike some other cloud computing ETFs, which came earlier before this ETF, they have a lot of exposure to top players in the cloud market like Amazon and Microsoft. But this ETF follows a more pure play cloud computing approach. It holds emerging cloud companies which have a lot of, which derive a lot of revenues from cloud computing, because Amazon and Microsoft are not pure play cloud computing companies. Charges 45 basis points, very reasonably priced, and has over 560 million in assets. And again, we can go to the quote page on Zacks.com. From there, the external homepage, the WisdomTree web page for this ETF, and look at details and also holdings in this ETF. Now it is it has about 93% exposure to US companies, and rest is international companies. Looking at the holdings, Fastly, Zoom Video, Zscaler, DocuSign, these are the top holdings. It's an equal weighted ETF. And these stocks have done really well this year because they benefit from the current environment. Now, the third one that also did very well is slightly different. This is actually a genomics ETF. This is not cloud computing or e-commerce, but it is an actively managed ETF which holds companies that are involved in the genomics industry, which are doing very good work in that industry, small companies, mainly small companies. Now, this is not the only Ark fund which did very well during the quarter. Two other Ark funds, ARKK and ARKQ, did well too, but that they did very well because of exponential rise in Tesla shares. Tesla is the top holding in those two ETFs. But this is different. It charges 75 basis points because it is actively managed, so a bit pricey, but all Ark ETFs have been able to justify their expenses. Pretty popular with investors, has over 1.5 billion in assets. Again, to take a look at this ETF, we can go to the quote page on Zacks.com, read our articles, and go to Ark's web page for this ETF. And you can see that it holds companies that are doing cutting edge work in these areas: CRISPR, targeted therapies, informatics, molecular diagnostics. Looking at the holdings, NVT, CRISPR, Illumina, these are among the top holdings. I don't know much about these companies, but they have done very well this year because of the kind of work they are doing. Now, on the last slide, I have the second quarter performance of these ETFs versus the S&P 500 index. And as I mentioned, the S&P 500 gained about 20% during the quarter. And all these three ETFs were up more than 67, 68%. iBuy was up more than 75%, and Ark ETF was up almost 70%, and the WisdomTree ETF was up about 68% during the quarter. And in full disclosure, I hold iBuy and WCLD in the ETF investor portfolio that I manage. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting deal regarding our Counter-Strike service. I'll see you next week.